something over here, guys. Give me a second. Let me go ahead and do a stream marker, okay? Let me see over here what we got in the chat room real quick. Welcome, Luis Ulloa. Welcome back, my friend.
Boom shakalaka!
By the way, Luis, gotta go to the beginning. We talked about the banks. And by the way, don't forget to do a Hadouken to the like button. And don't forget to subscribe if you haven't. If you have, ring the bell. Okay, guys, let's go ahead and take a look at this one. A lot of people looking for it, searching for NNOX. Yes, nano-x. We're going to go ahead and take a look at this article that I pulled out. A lot of people are asking me, hey, David, what the heck happened here? And this is the headline that I found when I got asked this morning. And I'm going to go ahead and review it with all of you and see what we got, my friends. So this comes from a website called mobyhealthnews.com. It's a pretty interesting article I want to share with all of you to see what happened today with Nanox. Nanox stock falters after investor report calls its business a complete farce.
Hey, what happened?
Activist short seller Citron Research called the Israeli digital X-ray company out on its limited R&D expenditure, suspicious distribution agreements, and other factors. Nanox has described the report as incorrect and misleading. This was reported by Dave Moyoy. Israeli digital X-ray company Nanox is fielding increased scrutiny and sizable hit to its shares prices, following the publication of a scathing report and commentary that referred to the company as Theranos 2.0. The criticism was posted yesterday by activist short seller Andrew Left's Citron Research, an online stock analysis and commentary blog that has focused on identifying overpriced or fraudulent stocks since launching as stocklemon.com in 2001. In it, Citron describes Nanox as a complete farce on the market, with stock prices heading to zero, not too long after the company announced a multi-billion market valuation. What's the impact? Nanox stock had reached as high as 64, but took a tumble yesterday following the report's publication and currently sits around $38 per share. And this came out earlier, guys, so keep that in mind. The company issued a statement on unusual trading activities this morning, in which it said that Citron's report was incorrect and misleading. Nanox believes that the allegations in the report are completely without merit and strongly condemns the publishing of the false and misleading information contained in this report. He said in the statement, the company is carefully reviewing the report and will provide additional information on the allegations as appropriate. Citron supports its claim with information gleaned from Nanox financial and business updates. Chief among the items noted are the company's modest R&D spending of roughly $7.5 million, let me correct that, since 2018 and its 21-person workforce, which Citron argues is unlikely to be sufficient when seeking to disrupt medical imaging market leaders such as GE, Siemens. Chewy, don't look at me like este tipo, bro. Oh my goodness, you maybe Philips and Fuji. Another highlight of the commentary is the Israeli company's reported interactions with the FDA. The company has submitted a 510(k) application for their system, which in March returned a major deficiency letter from the agency. Citron argued that the company's pitch to customers, highlighting a never-before-seen approach to medical imaging, is tonally at odds with language in its F1 filing, stressing that the company's regulatory submission expects to make no new claims as to the operation image quality or functionality of the Nanox, a filing to the SEC within the past couple weeks, stating that it has since submitted additional data to the FDA in response to the agency's identified deficiencies, including the results of certain performance tests. Capping off the report is a review of Nanox reported distribution agreements with Citron, set point toward fake customers. The largest agreement highlighted in the report will provide 1,000 Nanox systems to a company called the Gateway Group, which Citron notes does not yet appear to have a presence in the medical device sector. Another Latin America business development group is described in Nanox agreement as operating in Brazil, but according to its LinkedIn page, only has 3 employees who are all located in Israel, where Nanox is also coincidentally located. Citron is promising a second part to its analysis that it says it will focus on self-dealings, shady fundraising, and false market size claims, but its view of Nanox operations has already been made clear. To put things into perspective, this $3 billion company is nothing more than a science project with a simple rendering, minimal R&D, fake customers, no FDA approval, and fraudulent claims that are beyond the realm of possibility, the report reads. This $3 billion science project appears to be nothing more than a complete stock promotion. While Citron's report has yielded an immediate market reaction and response from Nanox, it could also invite deeper review from its stockholders. This morning, Rosen Law Firm, a practice known for class action suit against companies that have misrepresented their business, announced that it was preparing a securities lawsuit against Nanox and put out the call for shareholders to participate. And guys, I'm going to share this link with all of you here in the live video so you get that perspective over here. It seems like some of you already have your perspective here in the chat room. I'm going to review over here. You guys, oh my goodness, Patrick, love the Hadoukens in the chat room, my friend. They look beautiful. Let's see over here. Continuing with the combo breakers, you know it. So Patrick Chareta says over here, never heard of Nanox in Brazil. And Patrick, are you from Brazil, right? This company is BS. Guys, here that you're watching the video, let me know, what do you think about nano-x in the comment section or in the chat room? Let me go ahead and review the charts of this one, guys. NNOX, nano-x imaging. Downside, down, down, down. Nothing to see here, guys. The daily is super bearish. No confirmation for me. Only downside at the moment. I don't know about this one, ladies and gentlemen. I don't know. If you enter high at 66, my heart goes to you, my friend. But for a company like this, coming out on August 2020, August 2020, it already went to 66 by September, which is insane. But it did have a good structure, but now it just has some downside. No confirmation for us yet. If we wanted to see this progress, we can definitely keep tracking this company, but only if you guys want me to track it. So let me know in the comment section if you do. If you want me to review it, go ahead and do a Hadouken to the like button. Hadouken! If you don't want me to review it, go ahead and dislike this video. I want to know. That's the only way to know. But if there's a hater out there,
put a little icy hot on it, turn it sideways, and take it straight up your candy ass.
Not bad. And there you go, guys. A little bit of a review of Nano-X. There you go. Patrick Ciareta is from Brazil, my friends. Look at that. I was in São Vicente for a month back in 2008. Oh, man, I've never been to Brazil. I would love to go there. Very bullish on WFC and the theaters. Dude, we're gonna review. Whoa, Quantum Minds. Welcome to the channel, my friend. Good to see you.
Boom shakalaka!
Man, I still like that image that you have as a profile pic. Anyways, let's go ahead and go to technology, but crossed over with bio, which is going to be very interesting over here. And I'm talking about Google backed Amwell indicates to open at $20 to $22, $24 to $25, $25 to $26. Telehealth company Amwell, AMWL, guys. Price is IPO at $18 above the